Well, hello and welcome to the Lending Podcast. We are your host. I am Jeff Jones, and this is JB, the Guru of Mortgage. And we are coming to you from Austin, Texas, at the headquarters of Benchmark Mortgage. Pardon our dust. We have a blank slate behind us. So I think it's our second episode with
Our
nothing in the
newly
background.
renovated, yes. We haven't hung stuff on the walls yet.
We are under construction.
That's right.
But we're still here. We're still working. So what are we talking about today, JB?
We're going to talk about the importance of our database, of our clients, our referral sources, and our sphere of influence, and how, first of all, how much we value you as referral partners, how much we value our client base, and focus on that relationship throughout the process, and what a referral means, a client referral means to us and to your real estate agents as you're going through the home buying process and after the home buying process.
Yeah. We can't underscore or underrepresent the gratitude we have when we get a past client says, hey, I got a friend that's also looking, or I got a family member that's also wanting to use your service, or they're not happy with the home loan they have. They'd love to look at a refinance. We um, we stop everything we're doing
Yes.
and we make that call to reach out to them, because that is for number one, just so everybody knows out there, your lender, your real estate agent, we are unemployed until we do a deal. We are commission only. And so we owe any and all success we have to our clients. That
That's
makes sense. So all of our success is because of our clients and making clients happy. So when we get clients that refer us other clients, those are the best relationships because trust was already built. We've already had a successful transaction with them. And we want to continue to expand that friendship network we have with people, because for us, we don't buy leads
No.
as a lender. Some lenders do. We don't. So ours is word of mouth. Ours is referrals. And so that to us is our lifeblood.
It is. And as I enter my 24th year of this incredible industry.
Don't look a day past 19.
Thanks so much. 24 years, and I have been commission only for 23 years. I mean, this is my 24th year of being. So for those of you out there that are commission based, that volatility, right?
Right.
And for the first decade of my career, I would say I really had a job as a self-employed person. You can be self-employed, but you're really in job mode versus self-employed and be a true business owner.
Right.
And I think I really handled my business in not a very consistent manner. My first decade of doing
They had
this
computers
industry.
back then?
We did have
Okay.
computers.
Just
We
checking.
did take a lot of face-to-face loan applications, though, because our clients may not have had a computer. Back in the day, it's like, come in the office and we'll sit down
Sit with
and
the
write out your
typewriter.
application. Oh yeah, no, yeah, that was just past the typewriter stage. But I think where I missed the mark, I'll just admit, is I really didn't emphasize that relationship aspect of our business the first 10 years.
Mhm.
When you're commission only, let's just say, there is a lot of folks that you're just focused on the sale. You're
Right.
focused on the paycheck, and it's human nature because we get paid when loans close,
Yeah.
right? And as my business evolved, we got kind of through the crash, like 08, 09, and 10. I really came out of that crash with a new perspective on my business. And in 2011, 2012, really restructured how I operated on a daily basis, put more emphasis on my calendar management, put more emphasis on my appointments, on my structured appointments with my clients, so that in that moment, when I have a 30-minute or 45-minute meeting, that is the only person that I'm working with in that moment, and really focusing on that relationship and how can we help you achieve your goals, period. And so through that evolution, it really built my business, built my career. We got into COVID and the business went bonkers. Of course, we all know it was record low interest rates and record volume, and everybody was busy. And it really was a unique time in our world, and especially in our industry. And coming out of that, it really made me appreciate more the emphasis that we had put on our client referrals and our realtor referrals from our database, from our sphere, from our friends and family. Now they're not just clients, like, we're friends. There's
Right.
clients and referral partners that We play golf together. We're on fantasy football teams together. And that's really a special relationship versus just making a sale,
Yeah.
right? And just closing a deal and making a commission. Yes, our business is production based, and we of course we look at that constantly, right? We're in lead generation mode constantly. And really, when we were thinking about this episode, it was who are the most valuable referral partners that we have, and it's our clients. It's our clients, and our clients being our real estate agents, right? We have two sets of clients. We have real estate agent partners, we have clients, home buyers.
Mm-hmm.
And so that's what this is about. Yeah, this is about really emphasizing how grateful we are to obtain those client referrals, and how important it is as you're going out there and doing your day job on a daily basis, when you overhear that conversation about someone looking to maybe buy a house, someone may need to refinance, they're looking for a house to rent. That's a great referral for a real estate agent. So helping us build our businesses through those referrals.
Yeah, and there's something unique that a customer has that other people don't. That says, "Hey, JB got us into my home. You needed to call him because he would, he was the best, and he made it work. We closed on time. He told me everything that was going to happen, or he navigated all these crazy challenges that came up. You wouldn't believe all the stuff that comes up, but JB handled it with class, and that referral is unique because they worked with you. It's not like somebody just says, "Hey, I know this guy that does loans." Hey, this guy got me into a home, and so that kind of referral is so much stronger. So put it in perspective of, we measure a lot of our business so that we know what we can get better on. And one of them is conversion rates, and so a conversion rate of an online lead, just somebody just Googling us, looking at it, sending us a message online, those are about 2%. Like 2 out of 100 might have a deal.
Right.
So if you get 300 people doing that, you might close 6 deals, 5 or 6 deals. So it's very low because the quality of the people are just out there. When we get a referral from a realtor, "Hey, I have somebody that's interested in buying a home. I'd love to get them pre-approved with you. We're not sure where they're at with their house buying process." That conversion is around 25%. So we're closing like 1 out of 4 of those. The reason why they don't convert could be a slew of reasons, and maybe we should do a podcast of why
Sure.
people choose not to buy or back out of buying a home. But when we get a referral from a past client, man, those are what, 40, 50%?
Over 50%.
It's over 50%.
Closing ratio. Yes.
Because that is don't you want your friends and family to tell you who they used for buying a home instead of just trying to figure it out on your own? Who should you? It's the biggest purchase you'll ever make.
Yes.
You want it handled perfectly.
Yes. And think about that. Maybe a restaurant experience as an analogy. Think about, and it doesn't have to be a fine dining experience, but just a restaurant experience that you had where you were really impressed. The server was fantastic. The food was amazing, good value, all the things, ambiance, atmosphere, whatever it was, the drinks, everything was great. And you tell everybody about that, right? Like you're out there to, "Oh my gosh, I went to this new restaurant. It's fantastic." And that's really the service on our side for what we strive for with every single client. Now, buying a home, going out to eat, I know, two totally different things. However, the experience, and I was a server at a restaurant before I got in the mortgage business. In 2001 was my first summer of 2001. So I'm 23 years. I'm entering my 24th year. Before that, I was at 3 different restaurants during and right out of college, and before I found this industry. And I will say this: the restaurant experience is controlled by the server. Okay, the server is the quarterback of your dining experience.
They're the face.
Very much like the loan officer is the quarterback and the face of your home buying experience. And I've used this analogy a lot, and I really think it's relevant because a really great dining experience, the server has a team. Someone else may have come by and filled the waters. Someone's grabbing your plates. Someone else may have brought the food. But the flow of the evening or the lunch, whatever meal you're having, the flow of the experience is controlled by the server. You don't want the entree coming out before the appetizer. You don't want your check to hit the table when you still haven't ordered that dessert. Like, you want to at least be offered that. Most of the time you might say no, but you don't want the assumption of, "We're done, pay when you're ready." There's just a flow to the experience. And I think what happens in our business is we have a lot of lenders who, as loan officers, do not see themselves as the quarterback of the experience. They're simply taking your order. They're taking the information, they're sticking you in a loan, we're going to closing, you never hear from them again. And that's really unfortunate, but it happens. And so from our perspective, we have a team. We have someone helping with the water, helping with the food. The cook's back there cooking your meal, right? The server at a restaurant is not greeting you at the front, taking your orders, working the table, cooking the food, bringing you your food, and checking you out at the front. Like, they're not doing all that. They are managing the table. That really, to me, is the loan officer experience with the client. We are in control of your experience. If it doesn't go well, it's probably because of the loan officer. If it goes really well, you can give the loan officer some credit. There's also a lot of credit that has to be placed on the client too, and a lot of credit to the referral source. So that's just an interesting analogy. If you can relate to that, if you're in the service industry, if you're in the service
My wife
industry,
would appreciate this.
yeah,
She's been in the service industry 25 years.
exactly. Yeah, as long as I've been in mortgage, right?
But I want to even take that as another step further, because the transaction is a big deal, right? And your experience in that transaction is a big deal. But there's a slogan that we created of not just being there for a life event, but being there for a lifetime of events. When you find a lender that has that kind of attitude that you're talking about, but also continues that past that transaction, they want to look at your mortgage every year with you on the phone or in person. They want to continue to communicate to make sure your homestead's filed, that you have all the support you need from, landscaping and insurance needs and whatever kind of other services you need for your home, HVAC and all that kind of good stuff, alarm systems. We have a whole referral network behind it that we can refer people to, because we love referrals and so do our partners. Um, but all that to say is, you want a lender that can provide like a healthy home experience for your whole life and possibly for your other family members. And so when you find that lender that can do that, it's amazing. It's like you have somebody in your life now that will always look and help you manage the home value and how to use that asset best in the future as well. Because believe it or not, even though a mortgage is a 30-year term, the average life of a mortgage is like 6 to 7 years right now.
That's right.
And so people are going to be refinancing. People are going to be selling and moving. And so that means that even though it's a 30-year term, it's not a set it and forget it thing. It's something to manage and monitor over time.
It really is. And there's so many different life events. It just reminds me of a client that, oh gosh, I think it was about 2004. So maybe 20 years ago, we met through a networking event, and he was a single guy when I first met him. And we helped him with his, I think he was living in a condo at the time. So we helped him with his purchase. Then we refinanced the condo. Then he met his future wife, and they sold that and bought another house. Then they had kids. Then we refinanced them. And now they're actually going through a divorce. They're parting ways. They're figuring out what to do with the house. Like, talk about a lifetime of events.
Right.
This is a 20-year client that, and I feel super grateful that when he finds himself in a situation, or she finds herself in a situation where they need guidance, they ring my phone.
Yeah.
And that really, I do not take that for granted, number one. And I'm very grateful for the opportunity. Of course, life circumstances sometimes are unfortunate. And we have clients that are right sizing. We have clients that are working with figuring out what to do with an estate house after their parents have maybe passed. There's so many different scenarios, and I think we say that a lot, almost at every episode. But that's really what we're here to do, is bring 30 years of combined experience to your situation so that we can put you on the best possible path forward. And I love what you said about monitoring it on an annual basis. Sometimes that's a 5-minute check-in, 10-minute check-in. Doesn't have to be a whole ordeal to go through all your finances. But little things like, you should be looking at your home insurance once a year. Make sure you have the proper coverage. You should look at your home improvement, things that, maybe some deferred maintenance, things that you want to do to the home, and how best to pay for that based on what you have coming for your life experiences. So we love being in the mix on that. And we love being in the know if there's things that we can help you with.
Yeah. And I love that. So you dropped a tiny little nugget in there of making sure your home insurance is where it needs to be. So if you don't hear anything from this episode, if your homeowner's insurance is not covering the replacement cost of what you think your house is worth now because it's appreciated so much, if your house burns down and you have a mortgage insurance policy of $300,000 coverage, but your house is worth $550,000 now, you're not getting $550,000 for your house if it burns down. You're getting 300. So just touching base with your insurance advisor, like how do I get the the price per square foot back up to where the market is now? What does that cost me? I did that 2 years ago, just because our value went way up really quick, and it cost me pennies,
Right.
pennies on the dollar to
Yeah,
increase its value.
And
I
you're
was like,
talking
why
about,
wouldn't anybody do this? Because
yeah,
people just don't think to call.
no,
So please call your
we're
insurance
too
person
we're
if
too
you've had
busy. We're
if
too
you've had
busy
your
to look at
insurance
that.
policy for more than a year or two. Call your insurance person and get the value up.
Yeah.
Yeah,
And what you're talking about is the cost to rebuild.
cost to
Right.
rebuild,
And
replacement
let's
cost.
be honest. We know
Yeah.
the costs. They've escalated over the last few years. Now, again, we might have plateaued and even come down. Things like lumber went just
Oh,
haywire
that was
over
nuts.
COVID,
And steel.
and steel,
Yeah.
and so that stuff's come down a little bit. Still maybe elevated from 5 years ago, but it's not what it was.
Right.
But the true cost to rebuild your property, that's a good point. I mean, it does increase over time. Now, some policies have what's called a replacement cost rider. That's something I would recommend you talk to your agent about.
Mm.
All of a sudden, this is
We
insurance.
took yeah.
We
we
didn't.
took a
Hey, we go
segue
a
on that
different.
one.
Yeah,
But
we
I
don't
think
have any. We don't have any talking points behind the
right.
camera on this
Yeah,
episode.
but if you don't see your insurance person often, you don't hear these things. So we're
Yeah.
here for you. If you're an insurance advisor, we appreciate all you do. But no, I think that's also an interesting point. Is if you're referring a friend or family back to your lender, hopefully that is also a referral to the real estate agent
Yes.
or the insurance agent that you used, or anybody else in the transaction, a financial advisor. So we value our network, and so know that the power of your referral also helps out other people.
Yes. Yes. One of the things we talk about, especially in the pre-approval stage, because it's kind of a honeymoon stage of the mortgage process. You've made an application, you're now pre-approved, you're out house hunting. That's the fun part, going to open houses and seeing different homes. Your agent's taking you around looking at houses. While you're in that process, be thinking about who in your sphere, friend, family member, colleague, is going to be making a move in the next year. And make sure that introduction goes to your real estate agent. Yes, we'd love to have the opportunity at the mortgage as well, of course. However, a lot of your friends and family members, they may have an existing bank relationship or mortgage relationship. So we don't expect that every single referral is going to come. But your real estate agent, when you're out there shopping, that's a great time to be thinking about who else do you know that might want to live in your same neighborhood, right? I've got a friend that wants to move in here, and refer them to your agent. So we want to cultivate those referrals for our referral partners as well, and make sure that we're planting that seed, because a lot of times, and I'll say this, most people out there, and I hate to classify everybody, but a good number are not naturally connectors. From a networking perspective, you're not right. naturally built and gifted to connect people together. Now, we all know maybe that person that knows everybody, and they're just this naturally gifted connector. I've got a couple of them in my mind. That's a skill I've learned over time, but it's not something I was born with. And we probably all know someone who's just born serial networker. They know everybody, right? And they're just amazing at connecting people. That's a gift. So most of us have to work at those referrals. And I think that's something, if take nothing else besides the replacement cost coverage on your house from this episode, is be looking for opportunities to refer to professionals that you enjoy working with and taking care of you. I think that's probably
and don't be hesitant. I mean, if you're like not sure if you should, answers you should. It doesn't hurt. It only helps. And we want to make sure that we're here for you. I feel like this one wrapped up pretty good. So we appreciate all you out there for listening. Please like, subscribe, share, and if you know friends or family that need a loan, refer them to us.
Yes. Thank you so much.
Thank you.
See you soon.